What is going on? Welcome back to the channel. So today we're going to talk to you about SoFi. I want to give you a quick overview of some of the data points, what really moved in, go over everything else you need to know. But first, make sure to hit that thumbs up. And with that, let's get right to it. So I'm going to try and make this video as short as possible. It's my daughter's birthday, so I wanted to just give you the quick close notes of everything. Ultimately, SoFi did close in the green, 2.73%, 2070 the low, 2180 for the high, and 59 million shares being traded. So you had some interesting kind of sketchiness happen first thing, because in the pre-market, everything was going up because, and even including SoFi, because like what happened on Friday, I think people had the weekend to digest kind of the data and everything, and people came to the conclusion that it was possibly a little bit more of an overreaction, as well as it does justify a rate cut. So right now you do have a 94.4% likelihood of a 25 basis point cut for the September 17th meeting, and then even a following 25 basis point cut for the October 29th meeting. So that's right now a 67.6% likelihood of that occurring. So very good stuff for the broader market. The real question is, why did some entity, a $10.5 million transaction, why would someone sell? So that's ultimately what kickstarted that sell-off right here. So 10 million pretty much straight out the gate. In reality, though, we didn't even see any market makers covering, because there was a lot of in-the-money options last week that should have been covered. And I feel like this isn't the first time that market makers didn't really cover it first thing on Monday. If anything, I would guess that they were actually just covering it recently after hours, because there was some abnormal transactions just done on the secondary market. So the real question is, why is market makers trying to be strategic when they cover? And in my opinion, that does show that they don't want SoFi to really move higher. That might be also telling on potentially who your enemies are, if that makes sense, and who's really trying to manipulate the stock price. But nonetheless, 6.6 million, 3.1, 5.06, 1.5, 9.4, some of the notable ones being done on the dark pool. One thing to take note of, though, of that 59 million shares being traded, most was actually institutions trading it. So algos didn't really have that much to do with the daily price action, which is a positive thing. As I've explained in the past, I much rather have institutions trading it rather than algos trying to manipulate the price. Today, there wasn't any news, no SEC filings. There was no real data points coming out either, so it was just merely piggybacking off the broader market. Shorts do continue their kind of returning streak, returning 236,000 shares. And as I've shared with you in the past, my plan or hypothesis is that they will continue to return, most likely until it gets to that kind of 8% range, 6 to 8 in my opinion. So that might be a good thing. You won't be seeing any dramatic squeezes though. It will be slow and steady over the next several months. Something to keep in mind. But 10.27% of the free float is being shorted. Works out to be 119.68 million shares overall are being shorted. Looking at options, kind of low dollar value, so it does match with kind of the overall common stock, but 23 million in calls, 6.16 in puts, but 44% of all the options being done today were bullish in nature. From the bulls standpoint, you see consensus for it to be roughly around that $23 range, and then the bears are anticipating for it to be sub roughly around that 19. But quickly going back over to the bulls, like I said, there's a consensus for it to be roughly around that 23.50. That does match with that new analyst rating that just was posted today by Matthew, who does have a 35% success rating, Truist, and $23 price target. So pretty good stuff as far as that. One thing I do want to bring up though, with it closing at 2181, it is trading between these 2 points. So this R2 and this R1. 2191 is going to be that key point to really watch for it to get over tomorrow. 2164 followed by 2120 is going to be the following support levels. Today it kind of did touch this S1 and bounced off of that general area. So 2075 is a strong support. At least we know that going forward. And even when they did announce that issuance after hours on their earnings day, it kind of did touch this S1, it bounced off of it. So going forward, I think that might be potentially the low, unless something crazy does happen on a macro standpoint. But as far as tomorrow, just watch for 2191 and then 2236. And then aside from that analyst rating, there really isn't that much in articles coming out. And on the actual chart itself, things are looking pretty good. So 2194 is that ALMA, so it is kind of still below that, showing some consolidation, still potentially might be coming in the foreseeable future. But as far as this, it's above all the key pivotal moving averages that I generally like to look at. Stochastic RSI, very oversold, so that does mean that could really benefit it going forward. Not necessarily data points, because there's not really that much data points coming out this week that could move the broader market, rather companies unveiling their earnings. So if we have some good future guidance given by some speculative stocks or some big names, you might see the market move higher, and of course that could really benefit SoFi. So this is a very quick video, short Cole's notes on everything that really affected SoFi. Don't forget to hit that thumbs up, give yourself a shout out if you did buy, if you sold, or whatever you did with SoFi. And then one final thing, pop over to my Patreon if you're looking for some solid buy signals on stocks, options, crypto, many of which have been absolutely on point. Definitely worthwhile to pop over there and take a look. With all that said, appreciate all of you watching.